Okay, what is up, tycoons? What's up, traders? Super excited for today's video. We're going to be taking a look at PepsiCo. This is a really popular dividend stock, and what we're going to do is actually go through a nice technical analysis, go over the key levels that you need to be aware of, as well as some possible chart patterns to look out for. We're also going to teach a little bit about bearish divergence, how you can use this to help spot some potential future bearish activity, and really just help give yourself an edge in the market. Now, this is a viewer request. I do these viewer requests every week. So if you want to see your stock in the next video, all you've got to do is comment down below and I'll make a video on it as soon as I can. With that being said, we're going to head on over to TradingView now and take a look on our daily chart time frame. Okay, so if this chart looks a little complicated to you, just stick with me. I'm going to explain it all to you guys very quickly and very simply so that you guys can understand what it is that you're looking at. Okay, now the first thing that I want to talk about is bearish divergence. Okay. And so what you need to do is you need to have the RSI on. This is your relative strength index. And what this is going to do is going to give you the relative strength of a stock at its given price. So take a look at these circles we have on the chart here, right? We have basically a high right here. Then we have a higher high, and then we get another higher high right over here. So clearly the stock's in an uptrend, right? At these same exact points, we're creating a high and then a lower high and then a lower high again. This is known as bearish divergence when the stock is making higher highs, but the RSI is making lower highs. And it's an indicator that people like to use to help spot potential bearish activity. And sure enough, we did get a very strong pullback from 185 all the way down to about 167 on Pepsi. Okay. So, this bearish divergence trend line is going to still be important. If we come back up and come to retest this trend line, you need to be cautious if we reject it, right? There is the possibility we could reject it. Now, if you're bullish, you're going to want to see it break through and ultimately flip that from resistance to support and try to start trading above it, right? So definitely keep an eye out on that. If this thing continues to push up, you want to pay attention to the RSI and be mindful of that initial bearish divergence trend line that we've rejected many times. Now, the more times you test a level or a trend line, the weaker it gets. So there is the possibility we could end up breaking it. All right. Now, the next thing we're going to go over, all right, is that markets tend to move in 5-wave or 3-wave structures. So we're actually tracking a nice 5-wave structure right now that could potentially play out and take Pepsi back up to the 187 region, even possibly as high as 193. Those are overhead bullish price targets, right? And you can see that that would be the wave 5 extension, right? These are going to be the wave 5 price targets. We did a very nice job of coming up and hitting some of the wave 3 price targets and our initial bullish price targets on the move up on Pepsi. Okay. Now what I want to go over next is going to be these series of yellow lines on the chart. Now, what these are is these are the major Fibonacci retracement levels. And the reason you use the Fibonacci's, right, and you figure out the retracement levels is because nothing moves in a straight line down or in a straight line up, right? Rather, what you do is you get a move up, retracement, continuation of the trend, or a move down, retracement, continuation of that trend. That's obviously how you're going to be able to spot trend continuation, right? And so what you see is we have this very strong push up. We pull back and we hold above the 78.6% retracement level. And then we end up getting our third wave up higher, creating a high and then a higher high. Ultimately, we had bearish divergence there and that pulled us back. But look at what we did. We held above our 78.6% retracement level, which is 166.60. So once you break this level and flip that from support to resistance, you're going to be bearish below those levels. And there's a high likelihood that you're going to come back down and retest some of your previous lows, if not create new lows. So for right now, we're still a little bullish because we're above 166.60, right? And if we come down and break that level from support and turn it into resistance, most likely we're going to come down and retest some of our previous lows around the 160 range, possibly even the 155 range. Just depends on how things go. But for the moment, we got a nice push, a nice bounce up around that area. And we're currently above some of our other major retracement levels, which are 170.93. So if we pull back, that's an area you could potentially look for support. We're still under 173.97, so that's going to be a nice resistance level, as well as 177.07. But ultimately, above, these major retracement levels, that's when we could get the move up and continuation of the trend. Now, you also use these Fibonacci's to spot reversals, right? So if you move down, retrace, consolidate, and then break through those retracement levels, that's how you could spot an upside reversal. And you can spot a downside reversal when you move up, retrace, and then consolidate through those levels and break through, right? So we've had the move up, we've retraced, we are starting to consolidate. We need to be mindful of those major levels and making sure if we break those that we're prepared that we could end up seeing some downside movement. Okay, but for now, we're doing a good job of bouncing there, and we want to see if we can break through these levels and ultimately head up to our bullish price targets. Now, something else we need to be really cautious of is we do have a head and shoulders forming right now. Now, it's not confirmed, okay, but it is something we need to be aware of because we have put in a left shoulder, we have put in a head, and we are actually in the process of forming the right shoulder right now. Okay, so, if we continue heading lower, and we break through this 166.6 level, there's a very strong likelihood that we're actually going to come back down and see the head and shoulders play out and test, those 155 to about 160 levels on Pepsi. So I would definitely be mindful of that. Okay, we are tracking a 5-wave bullish structure, but we have to keep an open mind and keep an eye open to basically all of the different scenarios that could go on. So, for right now, definitely be mindful of that right shoulder. We're still above our major retracement level. So for now, we're getting some healthy consolidation. We're going to see if we can push back up. The last thing we'll cover is gaps. Okay, that's what these blue boxes are. If you're not familiar with these fill about 90% of the time historically in the market. The big question is when, right? Not so much if. And so it could take days for these to fill. It could take weeks. It could take months or years. Right. But what I like to do personally is I like to chart these gaps up and I like to set some alerts on them. Right. And so a lot of times you can see price action being drawn towards these gaps. And, if you set some alerts nearby those gaps, you could potentially catch the gap fills. Right. And look to make a trade to the upside or potentially even a short trade if you're trying to catch the gap fill to the downside. So be mindful of those. We do have a pretty big gap down to about 165 to fill. That may fill soon. It may not fill. There's that 10% chance it won't fill, or it could take years for that thing to fill, right? We do have a small gap up to 175. So if we're able to break above this 173 level, there's a higher likelihood that most likely we're going to come up and try to fill this gap here on about 175. Now, that's pretty much it for today's video. We went over all of the key levels of support, went over the bullish price targets, aka resistance levels that you guys need to be aware of, as well as the head and shoulders pattern, and also, the 5-wave structure we're tracking, including the bearish divergence on the RSI. So hopefully you learned something new. And if you did, smash that like button, subscribe to the channel. I do these viewer requests every week. So if you want to see your stock, crypto, whatever it is in the next video, all you've got to do is comment down below and I'll get to it as soon as I can.